Good morning. It's May 30th, Tuesday, after a long weekend of Memorial Day festivities and remembrance. Let's get to the Longbow dashboard because we're having a big tech day again today. So here what we've got, I've got the Qs and XLK, so two ETFs here for tech showing overbought. You've got nearly a 10-to-1 downside in these. So this isn't the day to be like plowing into tech. You've got semis, so basically you're at the top end of the range. That's closer to negative 8.5 to 1 downside in terms of odds. You've got Broadcom, you've got NVIDIA. So you really have here, 27.4 to 1 downside on the signal, and NVIDIA, it's minus 3.3 just because the signal's moved up, not yet an overbought, but after the back of such stronger results and the CEO pumping that AI is going to transform farming to factories to your breakfast cereal. This is what you get. This is what you get. Let's take a look. This is what you get. So yeah, there's a little more upside now that the range is blowing out because people are going nuts thinking, I got to do it. But look what the insider transactions are doing. Just FYI, right? And now you're at implied volatility discount. It's a beta of 2 to 1. So this thing is moving. But if you're looking at NVIDIA, obviously it's bullish short-term, intermediate term, but you're looking at a huge discount. So people are super complacent on this one. So if there's any backing off, any issues out there, you can tell how funds are going to get pulled. And you're seeing this really across the board, people getting super excited about AI, anything touching AI. We've been writing about that in the Longbow notes. Doesn't mean we're not believers, doesn't mean we don't have positions in it. We just want you to think about risk managing your positions, especially when we're in a period where demand could be softening, inflation staying high, consumers are really feeling the pain. There's a great article out on Bloomberg today about that, how everyone's telling consumers they should feel rich, the labor market's strong, their wages might have been going up, but when they're paying for things that are just super expensive, they're not feeling rich, they're feeling really concerned. So again, we would look at this because what happened in 2022, rates up, long duration and tech down. So be a bit careful if inflation keeps sticky. That the Fed's going to have to consider either continuing to hike or keeping rates higher for longer, which is not the expected route from the market this day. So there you got it, tech on a roll. Think about risk management, and we'll see you back tomorrow.